Students, welcome to my channel Krishna-singhdeo. We are meeting here for doing chapter number 9 of Business Studies Class 12 CBSE board. We were doing financial management. If you have not seen the previous videos, please go and check in the playlist. There are 4 lectures which are being already uploaded on YouTube. This is the 5th lecture which we are doing today. In the previous lecture, what we had done, we had seen what is fixed capital and the factors affecting the requirement of fixed capital. Today, we will understand, first of all, what is working capital, and we will also see what are the factors which are going to affect the requirement of working capital. Okay. So let us understand what is working capital. First of all, working capital is that amount of capital which is required for day-to-day functioning of a business. The capital which is required for the payment of raw material, the capital which is required for payment of salaries to the worker, and the capital which is required for the payment of electricity bill and the other expenses. Means this is not the capital which is required for the acquisition of fixed assets like plant, machinery, land, building, etc. This is the capital which is required for day-to-day functioning of business. For example, investment into the inventory. So before we understand what is working capital, we must be very clear with 2 terms, that is current assets and current liabilities. Because excess of current assets over current liability only is your working capital. So first of all, understand what is your current assets. Current assets are anything like cash and cash equivalent. It can be marketable securities, which are easily convertible into cash. It can be bills receivable, debtors, finished goods stock, and inventory of raw material, of work in progress, etc., and prepaid expenses. These all are your current assets. Whereas your current liabilities are bills payable, your creditors, or any other outstanding expenses, short-term loans and advances, short-term loans and bank overdraft, etc. These can be your current liabilities. So excess of current assets over current liability is called working capital. Okay, if you're an account student, you must have studied current ratio also, where you must have seen that how excess of current assets over the current liability is required to maintain the good liquidity. So in this chapter, we are going to now study why working capital is not same for each business. Same like fixed capital, which is not same for all the businesses, working capital also is not same for, say, all the businesses. We cannot say an ideal amount which is good for all the businesses. It depends on various factors like nature of business, scale of operation, and various other things. So let us see them one by one. What are these factors which are going to affect the requirement of working capital? So first of all, you see what is the nature of business. It will decide whether you require a large amount of working capital or a small amount of working capital. So if you are a manufacturing concern, your requirement for the fixed working capital is going to be high. Why? Because you need to acquire the raw material, then it will take some time, that is called work in progress, to be converted into finished good. Then finished good also cannot be directly sold. It will take some time for selling and distribution. After that, if you are selling on the credit, the debtors will take their own time in paying you the cash. So means for a couple of days or months together, your cash is being blocked and you are going to get that cash from debtors after some period. But in the intervening period, your expenses will remain as it is. That is payment to the workers, payment for the raw material, and all other expenses. So you need to raise good amount of money for meeting the requirement of working capital. On the other hand, if you are a trading concern, you will not have to acquire any raw material. Your production labors will not be there, and you just have to acquire the stock which is ready to be sold, and your sale is going to be faster. The only time period which will be taken is by the trade receivables. Whatever credit period you have allowed, after that they will pay you the money, and you will have to wait shorter for the cash to be converted into cash again along with profit. So your requirement for working capital will be lesser as compared to a manufacturing concern. So crux of this is, if you are a manufacturing concern, your requirement for working capital is high, and if you are a trading concern, your requirement for working capital is lesser. Second is business cycle. You all must have seen this particular kind of diagram. Let me draw and show it to you. I'm very much sure that you all must have seen this diagram. This is called business cycle diagram, which is this period. This is called boom period, where market is going to be in boom, means high incomes are there, people are demanding more money and everything is positive. Whereas this period is called depression period, where market is going down, people have lesser income at their disposal, and what is happening, they are demanding also less. So if you are facing boom period, at that time the demands are going to be high, means high level of production is required, high amount of finished good to be stocked by the traders to be sold by the demand of the customers. So at that time the requirement of working capital increases, whereas in the depression period what happens, the requirement of working capital will be lesser because of the less demand in the market. And why less demand in the market will be there? Because people have lesser incomes at their disposal. Now let us understand seasonal factors. What are seasonal factors? Some businesses are seasonal. For example, the monsoon goods and the winter clothes and the summer clothes, etc. They have seasonal demand. So during the season, the demand increases, and for meeting that demand, high level of production is to be done. So during the peak season, the amount of working capital is required. Maybe the firms will have to engage some ad hoc laborers, etc. and they will have to acquire more raw material. Whereas during off season, this requirement will not be there and they will require lesser amount of working capital. Next thing is scale of operation. The same point we had studied when we were doing fixed capital requirement also. So scale of operation, if it is a larger scale of operation, more amount of working capital will be required by the organization. And if it is a smaller scale of operation, lesser amount of working capital will be required by the organization. So it is directly proportionate with the scale of operation. Larger or bigger scale of operation, bigger amount of working capital required. Smaller scale of operation, small amount of working capital is required. Next one is credit allowed. What is the amount of credit allowed? So credit allowed to buyers means when you are selling on the credit basis, there are hardly any businesses which are selling on the 100% cash basis, because this is a trend in the market that you have to sell on the credit. So if you are selling to your buyers on the credit basis and allowing them a very long credit period, it means your money is blocked for a longer period of time and you require higher amount of working capital. Whereas if your credit period is shorter, you will get cash faster from your buyers and your requirement for working capital will reduce. Okay, so depends on the credit period allowed. Longer credit period, higher amount of working capital required. Shorter credit period, lesser amount of working capital required. The next one is, what is your production cycle? This particular concept you study in accounts also, where you understand what is a fixed capital and what is a current what is fixed asset and what is current asset, and similarly what is current assets and non-current liability and non-current liability. I'm sorry. Okay, so for that, the understanding that, you must have studied in accounts also what is operating cycle or production cycle. Production cycle is the time taken for the raw material to be converted into cash. Yes, first you acquire raw material, then you convert it into the work in progress. Then from work in progress, it is converted into finished good. From finished good, it is then sold and distributed to your buyers. Your buyers may not give you cash upfront. They will take some time, so that credit period will be allowed to you. After that credit period only, they are going to give you the cash. So all this intervening period may be few months, few days, or couple of months. Depending on that, it will depend on the many factors. Maybe the product which you manufacture is a complex product. It does not get manufactured within few months. It takes a lot of months to be produced. Or maybe the product which you are producing is a very simple product, does not require very complicated technology and get produced within few days only. So depending on that how big your production cycle is there, working capital will get affected. If your production cycle is a longer one, then you will require good amount of working capital at your disposal. And if your production cycle is a shorter period cycle, then you require less amount of working capital. So these are some of the factors. Some more factors are here what are going to affect the working capital requirement. Some one factor is credit avail. Before this, we had studied credit allowed. Now, credit avail. Credit avail means how much credit period your suppliers are allowing. If you are a trader, you will buy manufactured goods. If you are a manufacturer, you will buy raw material. In both the cases, how much credit period is allowed by your supplier matters. If your suppliers are giving you good amount of credit period, your working capital requirement will reduce because you don't have to pay cash upfront. But if your suppliers are not allowing you credit at all, or your suppliers are giving you shorter credit period, then your requirement for working capital will definitely increase. Next is operating efficiency. The business which have good operating efficiency, where cash is managed properly, where inventory management is done properly, and no delays are there. In those kind of businesses, requirement of working capital is lesser, whereas the other businesses where unnecessary delays are there and cash management is not proper, their requirement of working capital will increase. Next is availability of raw material. So there are a lot of businesses where availability of raw material is not throughout the year. It is available only during the season, or the raw material may not be available in our country. We will have to import it from somewhere. So depending on these factors, working capital requirement can be less or more. If your raw material is available only during a particular season, then you will have to invest a huge sum of money during that season. Your requirement for the working capital will increase. Or if your raw material is available throughout the year, you can buy it in the small quantities. You need not to store a huge amount of raw material. In that case, your working capital requirement will be small. Then what is growth prospect? The firm which have high growth rate, they need to have high amount of working capital because they are aspiring to grow more, and in order to grow more, they will be expanding their business or diversifying their business or doing such sort of activities for which more amount of working capital is required. Fixed capital will be required, that is there, but working capital will also be required in a more amount. So this kind of firms will require more amount of working capital. On the other hand, the small firms where the growth prospects are limited, they will not need huge amount of working capital. Next is level of competition. What is the level of competition is also going to impact on the requirement of working capital. So if level of competition is very intense and business have to offer discounts because the others are offering discounts, and they have to somehow attract the customers by running huge advertisement campaigns and giving discounts or some sort of other activities like this, which is called sale promotion, then the requirement for working capital will increase. On the other hand, if the level of competition is moderate or low, the requirement of working capital is going to be lesser. Next is level of inflation. Inflation means the general price rise. So inflation, if it is there, it's persisting in the economy. Because of that, the working capital requirement will be high because you will have to pay high amount to the workers, and for acquisition of raw material or the finished good, you will have to pay the high amount, and your working capital requirement will increase. On the other hand, if inflation is moderate inflation, the requirement of working capital is going to be less. Okay. So I hope students, you understood what are the various factors which are going to affect the requirement of working capital. We discussed in detail each one of these factors. Let us quickly go through all these factors which are impacting on the working capital requirement. First of all, what is working capital? Working capital is excess of current assets over current liability, or the capital which is required for day-to-day functioning of the business. Then we saw what are the various factors of which are going to impact on the working capital requirement. We studied what is how nature of business impacts on the working capital requirement, business cycle, seasonal factors, sale of operation, credit allowed, production cycle, credit availed, operating efficiency, availability of raw material, growth prospect, level of competition, and inflation. So these are some of the factors which you have to memorize for factors affecting working capital. And I hope this is clear to you all, and memorizing will not be difficult. Now a quick tip how you can memorize this. You will have to write it at least 3 times in your notebook. Yes, look at these points, read them carefully. First 2 times you see at the notebook, at the text, whichever I am sharing with you. And then next time, 3rd time I'm talking about, you write it without saying, and see how many you can write without saying. In this way, you will be able to memorize it faster, and repeat this practice at least 2 times. So that way it is going to go in your permanent memory and you will never forget. Okay, so write it 3 times and repeat this exercise at least twice. I hope you liked the video and you got to understand how working capital is going to be affected for various businesses. We will meet in the next class with the next topic. Till then, have a great day. And if you have not yet subscribed my channel, do not forget to subscribe, share, and like. We will meet again. Have a great day.